Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Happy Monday.
Happy Monday to you too. Happy Monday to Dick's Sporting Goods investors. If you've been in the stock for the last 3 years, I mean the stock was $63 3 years ago. Now it's trading over $210. It's had a great run here, Landon. Do you still have the data that supports these moves?
We know that they had a good holiday season and good Black Friday and all that. But no, ever since then, we've fallen off a little bit on the data side of things. I mean, when you look at the web data, you look at the app data, both of those are kind of moving in the wrong direction, not what you want to see. Of course, when you talk about like the app data, for example, obviously you can see where, the holiday shopping, gift giving was in that chart. And we got a little bit of a boost this week in that last bar, but overall you can see we've kind of returned back to normal. So there wasn't a lot of, stickiness to that holiday shopping. It was just gift giving, and then those customers are not coming back. They're not part of the regular crowd. So you'd hope to convert some of those into more stable customers, but that's not what happened. Also, the web data is a little bit weaker. We've got it at -9 on a year-over-year basis, which again you don't want to see. That is totally corrected for seasonality. So to have a negative number there obviously is not what you want to see. Moving in the wrong direction. But even though the stock is up significantly, like you said, in a multi-year span over the last little bit, I mean, it's dropped quite a bit. So I think that with the markets overall, it's moving obviously, but also, I think expectations have pulled back a little bit. Even if you look at the last earnings report, I mean, they did really well, but the stock just didn't, jump out like you thought it might. We do know that, they've done well. That last report, their comp sales were up over 4%. Their ticket size was almost up 5%. Number of transactions slipped slightly, about a -0.5%. But overall, I think the company was going in the right direction. I'm not saying it's not. I'm just saying that it's just kind of softened a little bit when it comes to the data. So our outlook on it is a little bit closer to neutral, maybe even slightly bearish. But given where the stock has moved over the last little bit from 255 or so down to 213. I think that it's a lot of that negativity is probably baked in. So we're not super bearish based on this data. We just think that the price where it's at now is probably more justified than investors would like to hear.
Yeah, Landon, there's a couple reasons that the stock has sold off 8.5% in the last month. But their fundamentals are strong, their sales growth is strong, the cash position is strong, cost management effective, but, and here's where it gets but, with core inflation looking around 3%, sporting goods prices have come down 2.8% in the last month or so. For the year, they're only up 0.4%. So their prices aren't keeping up with the levels of inflation, and they're seeing some softness there. So even though they're a well-managed, well-run company, they're fighting against some prices coming down, and that might be the reason that they've discounted it into this number. But that said, the most important thing from them is probably going to be the guidance anyway, right? As we've seen this earnings season, it depends how they shape it going forward. Landon, your thoughts?
Yeah, I agree. I mean, unless you had some really big event, like an iPhone release or the Model Y coming out, unless you had something like that, it's all about guidance in the future. People want to know, how's this business looking in the future, and I think you said it. I mean, this is a very well-run company. They execute very well. However, there are macro conditions that they just they can't change. They have to deal with them. And that part of that is the prices coming down. I know their inventory is up significantly on a year-over-year basis. They're focusing on, exclusive products and private label products that obviously they're doing what they need to do, but sometimes it's a little bit out of their hands. So, let them get through this. I think this is a great company to own long term. They are the only one, really. I mean, they dominate this market, and it's just a question of, I guess, getting through sort of these tough macro conditions right now. They're not super tough, but they're not ideal, and so I think that justifies the 8 or 9% drawdown that we've seen here. But the data that we've got just shows that it's probably continuing for a little bit. So I wouldn't be surprised if if the guidance is just a little bit tempered. Maybe not super negative, but I would guess that they're going to say that the guidance isn't great. And then it's just up to investors. Is that kind of commentary justifying the $213 price, or have we sold off too much? Do we need to move back towards 220 or so? So we'll see how the investors react, but I think it's going to be kind of a ho hum earnings call with a little bit not weak guidance, but just temper your expectations kind of guidance.
About that, Landon. Yeah, Landon. So I look at the consumer as a whole on this in the retail space. You saw that pullback in Target. You saw the pullback in Walmart. You've seen the consumer sentiment and confidence numbers. It feels like Dick's Sporting Goods, even though it's a good company and they've done well, they raised guidance last quarter too, is the fact that, hey, if people stop spending, this is going to be one of the first things they stop spending on is, high-priced, sporting goods stuff, whether it's golf clubs or anything else, right?
I might disagree with you there. I think that yes, when it comes to golf clubs and things like that, yes. But when it comes to what I would guess is a large percentage of their revenue, youth sports, that's not what you're cutting out. That is, I think, that is a huge business that's continuing to grow. They've got that Game Changer app that they own. The unique visitors are 5.5 million, up 21% year over year. They got 2 million daily active users on that app. And so I think that when it comes to your kids, you're always going to buy them the best baseball bat and the best glove and the best basketball, whatever it may be. And you're going to make sure that they're geared up for the next season. And, with each kid, you got 10 or 12 seasons before they move out of the house. So I think that they're a little bit protected in that. Now, the dad, getting the new driver, maybe he'll put that one off so that Billy can have the best hockey stick, whatever it may be. But I think that they're somewhat insulated from that. And I would put this up with, we've seen this shift from, into experiences when it comes to travel. People like to dine out. They like to travel. That's where they're spending their money, even though it's tight. And I think that this can go in that category as well. I think people are willing to spend on the youth sports because it's just this season we need the new thing. But then there's always the next season. I think Dick's a little bit insulated on that one.
So you guys are neutral on this one, but is guidance going to be the key for you guys moving forward as far as your rating?
Yeah, it is. We're at a -10 right now. That's our score for them. A lot of that has to do. We would be more negative if it wasn't for the fact that their stock has dropped so much over the last little bit. And we saw the numbers coming in, like you said, Target, Walmart, all those. So I think that there's a little bit of priced-in mentality when it comes to retail. So I don't see a big disappointment out of them coming. I think it's just going to be, hey, we're plugging along, we're doing okay. Things are a little bit slower, but we expect to be great in the future. That kind of a report where investors are scratching their head a little bit, and I don't see a huge move out of this one either way. I would lean negative, but not too much. And if I saw anything under 200, in any time this week, I think that'd be a good buying opportunity.
All right, great stuff, great data as always, Landon. Appreciate it.
All right, thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio. They've been pretty positive. They've kind of nailed it over the last couple of years here, Kevin.